In February 1942, the British government made soap illegal to buy without a coupon. Because soap isn't really about cleaning, it's about fat, and whoever controls the world's fat controls far more than your shower. With an estimated age of up to 5,000 years, soap is one of the oldest products humans have ever made. Right now, it's a $54 billion global industry that's growing faster than it has in a decade. The bar in your shower is the end of a supply chain that runs through Indonesian rainforests, Australian cattle stations, and Belgian chemical plants most people have never heard of. So why is soap suddenly political? Who actually makes money when you wash your hands? And how did a 5,000-year-old product become one of the most geopolitical tangled industries in the modern era? The global soap market is worth around $54 billion in 2026. To put that in context, that's bigger than the entire GDP of Bulgaria. The biggest consuming region is the Asia Pacific, roughly 39% of the market. That's driven predominantly by India and China, where rising incomes and urbanization are pulling hundreds of millions of people into daily packaged soap consumption for the first time. The biggest producer is Indonesia, not of soap itself, of the raw material inside of most of it, which is palm oil. Indonesia makes 54% of the world's palm oil supply, and palm derivatives are the default fat in modern mass market soap. Three forces are driving the market right now. One, post-COVID hygiene habits have stuck. Hand washing went up and it never came back down. Two is premiumization. Consumers are trading up. Organic, natural, antibacterial, fancier soap. Three, palm oil volatility. The raw material input price swings by 30 to 40% every year. The pressure gets passed straight through to the bar in your shower. Soap needs fat. That's the entire chemistry. You take a fat, you mix it with alkali, you get soap. For most of human history, that fat came from animals, predominantly beef tallow. Then, in the last 50 years, the industry switched almost entirely to palm oil. Over the past 20 years, palm oil plantations have replaced roughly 3 million hectares of old-growth Indonesian forest. It's about a third of Indonesia's total forest loss. The palm oil sector alone emits around 220 million tonnes of greenhouse gases every year. That's nearly a fifth of Indonesia's total national emissions. Big companies have publicly pledged to stop buying palm oil linked to deforestation. They've been pledging that since 2010. They've missed their 2020 deadline. They're now missing the new one. In late 2025, investigators found that plantations actively clearing rainforest were still selling palm oil to some of the biggest consumer goods companies on earth. The same ones that publish zero deforestation commitments on their website. The soap in your shower, it isn't just a cleaning product. It's a decision about a forest, the one you've never seen and more than likely will never see at the current rate. None of that happens by accident. 4 economic forces built this supply chain, and they're the same 4 that built almost everything else you buy. Firstly, you've got what's called substitution. When one input gets too expensive, industries swap it out for a cheaper one. In World War II, the Allies lost the Pacific. No more coconut, no more palm oil. So soap makers went back to beef tallow. After the war, palm came flooding back, cheaper than tallow, easier to ship, didn't need refrigeration. The industry, it switched again. The whole global soap supply chain today exists because palm oil won on a price war against cows. Externalities. An externality is a cost the buyer and the seller don't pay. Think of it when soap company buys cheap palm oil linked to rainforest clearing, the carbon, the biodiversity lost, the displaced communities, none of that really shows up in the price tag. Someone's definitely paying. It's just not the person in the shower. Comparative advantage, palm grows faster in Indonesia and Malaysia than anywhere else on earth. 6 times more oil per hectare than sunflowers. 30 times more than a dairy cow produces fat. That yield gap is why 85% of the world's palm oil comes from 2 countries. It's a textbook comparative advantage. Also, the final point I'd make on this is commodification. In a commodity market, every ton is priced the same. 1 ton of palm oil trades for the same price whether it cleared a forest or not. That's the problem. The market itself can't tell good palm oil from bad palm, which is why regulation, not consumer choice, is the only thing that actually changes the supply chain. So we have 3 trends that are shaping the next decade for soap. First is the regulation is finally coming. The EU's deforestation regulation is the first law that forces companies to prove, not pledge, but prove that their palm oil isn't linked to forest clearing. It's been delayed and watered down repeatedly, but it's still the most serious attempt in history to price the externality into the product. Second, the bar is making a comeback. For 20 years, liquid soap has been the big dog on the market. Now, the sustainability push is reversing that. Bar soap uses less plastic, less water to ship, and costs less energy to produce. In premium markets, bars are growing faster than liquid soap for the first time in over a decade. Third, the consolidation is tightening. 4 firms already control more than 60% of the global market. Expect that to reach 70% by 2030. The winners will be the big 4 who can absorb regulatory costs. When you've got that type of monopoly, that's going to shape a market more than having a lot of individual players littered throughout, especially when it comes to price. Now, the losers in all of this, they're going to be those small brands who can't afford the compliance, and the Indonesian smallholder farms who produce roughly 40% of the palm oil but can't afford the certification. So back to where we started. Why is soap suddenly so political? Well, it's because that fat supply, that supply, it's finite, concentrated in only 2 countries, and the environmental cost was never priced in. And we got to look at who's making the money when you wash your hands. So you got 4 companies, American, a Britain, a couple of European ones, and almost none of it goes to the farmer or back to the country that is paying that incredible externality cost. So how did a 5,000-year-old product become so tangled? Because when you trace any simple product far enough back, you end up in a forest somebody's clearing. Look, the next time you pick up a bar of soap, you know you're not really buying the soap. You're buying a small decision about a rainforest on the other side of the world, and almost nobody making that decision realizes the impact that they have. This has been a really short one on soap. I think it's quite interesting to take these regular products and look at the impact they're having. Next Thursday, we are going to tackle seaweed. And that's another really interesting product that no one would think much about. Let me know about soap. Are you a bar guy, or are you still using the dish soap or body wash? Let me know down in the comments below. As always, I really